Welcome back to Explain the Charts, everyone. Today, September 25th, 2025, we're taking an in-depth look at the S&P 500, represented by the SPY ETF, as the market stands at a critical juncture. Current events are heavily influencing sentiment. The S&P 500 has been wobbling after 2 consecutive days of losses from recent record highs. Investors are holding their breath for key economic data, specifically the jobs report due out today and the personal consumption expenditures, or PCE, inflation report expected tomorrow. Adding to the caution, Federal Reserve Chair Jerome Powell recently commented that stocks are fairly highly valued, a sentiment that can certainly temper exuberance. However, an expected Fed rate cut this week could provide some much-needed stimulus, potentially fueling a rally, as some analysts like HSBC predict the S&P 500 could even hit 7,000 by year-end. Let's dive into the charts, starting with the daily view, to see how these fundamental narratives are playing out in price action. Looking at the long-term daily chart for SPY, we can clearly see a strong overall uptrend prevailing since May 2024, despite some significant pullbacks. Notice the substantial decline we saw in early April 2025, when SPY dropped from highs around 564 down to a low of 481.80. This was a sharp and dramatic reversal, marking a crucial support level. The subsequent aggressive rebound from that 481.80 low, as shown by these powerful green candles, demonstrates significant underlying buying interest and market resilience. This ability to quickly recover from such a deep correction highlights the underlying bullish strength that has characterized the market in the past year. For long-term investors, the 481.80 level now stands as a very strong psychological and technical support, which the market successfully defended. Zooming back out to the broader daily picture, after that April reversal, SPY embarked on another steady climb, pushing towards new all-time highs. We can observe a clear upward channel or trend line that has guided price action through the summer months and into September. The most recent candles on the daily chart reflect the news we discussed earlier, showing a slight pullback over the past 2 days, with SPY closing yesterday around 661.10. This retreat from record levels is a direct manifestation of the caution spreading through the market as investors await critical economic data. Currently, the daily chart suggests immediate support might be found around the 660 to 661 level, corresponding to recent daily closes and minor consolidation points. A decisive break below this could signal further short-term weakness, aligning with the market's current struggle to rally. Now, let's switch to the 1-hour chart to get a clearer picture of the recent intraday movements and the short-term pullback. Focusing on the last couple of days, specifically September 23rd and 24th, we can see the short-term volatility and the slight downward bias. Price action has been characterized by lower highs and lower lows, indicating that sellers have had the upper hand in the immediate term. This short-term weakness is perfectly aligned with news reports stating the markets struggle to rally after 2-day pullback from record highs and futures wobble after back-to-back losses. Key short-term resistance for SPY appears around the 663.70 mark, which was a high hit on September 23rd. On the downside, immediate support is currently holding around 659.67, the low reached on September 24th. A breakdown past this 659.67 level on higher volume would strongly confirm increasing bearish momentum in the very short term. Drilling down further into the 15-minute chart, we can examine the most granular price action from the latter half of September 24th. Here, the bearish sentiment becomes even more apparent, with SPY experiencing a noticeable drop from around 661.12 to 659.70 during midday on the 24th. Despite some attempts to recover, the price remained under pressure, suggesting that sellers were active ahead of today's economic releases. The lower trading volume observed during the extended hours on this time frame often indicates investor uncertainty or a wait-and-see approach. Traders should note the quick, sharp moves and attempts to consolidate, highlighting heightened sensitivity to news during these periods. The ability of SPY to hold above the 659.70 level into the close of September 24th is a small win for bulls, preventing a steeper decline before the market opened today. Circling back to the daily chart for a broader perspective, the overall picture for SPY remains cautiously optimistic in the long term, despite the current short-term jitters. The market has a history of strong recoveries after significant dips, as seen in April 2025, reinforcing a foundational bullish trend. For bullish traders, a sustained break above the recent high of 667.29 would be a strong signal, potentially setting sights on the ambitious 7,000 target projected by some analysts. This move would likely be reinforced by positive economic data, particularly cooler inflation prints or stronger-than-expected jobs numbers, coupled with a dovish Fed tone. Conversely, a bearish outlook would be strengthened by a decisive breakdown below the immediate support at 659.67, especially if accompanied by higher selling volume. Such a move could see SPY testing lower psychological levels, perhaps towards the 650 mark, and if that fails, even revisiting the 550 area from the April lows if significant negative catalysts emerge. The most important levels to watch in the short term are the 659.67 support and the 663.70 resistance. A close below 659.67 today, especially on heavy volume, would indicate increased bearish pressure, with the next major support at 650. Conversely, a strong close above 663.70 would alleviate immediate selling pressure and could target the 667.29 record highs. Looking ahead, the market's direction will heavily depend on today's jobless claims data and tomorrow's PCE inflation report, as well as the Federal Reserve's stance on future monetary policy. Keep a close eye on these macroeconomic releases, as they will likely dictate SPY's short-term trajectory. Thank you for joining Explain the Charts, and remember to always do your own research before making any trading decisions.